purpose of this video is to talk about control, to show you how the rules that are provided with a reporting scheme, if they're machine readable, can be controlled by software, using software. So, as accountants know, financial reports are not forms. Okay, so basically, a report model can be modified by accountants. But how do you eliminate the wild behavior of accountants doing whatever they want when they create a report? So the way you do that is that standard setters or regulators or anyone else specifying a report, they describe what needs to be reported. So basically that description is a specification of what is permitted. So with XBRL, what's going on is that description is put into machine readable form. And then that machine readable form can also be used to convert that description into human readable form. Then accountants can use that description to create reports. And because it's in machine readable form, software can be utilized because it can read that description and then help the user create that report. Then, after the report has been created, software can be used, again, assisted by the machine readable rules, the machine readable description. The software can be used to verify that the report that was created was in fact consistent with the description or the specification of what is permitted. In addition, anyone desiring to extract information from a report, those machine readable rules can also be used to extract information from that report, which is of high quality because it was verified to be consistent with the description of what is specified by the regulator or the standard setter. So that's what is going on and why all this effort is used to describe a report. So here you can see a human readable description of what is required in a report. So this was auto-generated by software using these XBRL files. So basically, if you click on this, you see XBRL files. These are the files that provide the software with the stuff that it needs to do to take this and put these machine readable things into a format humans can read. So here is such software. So this, all this is the same as all of this. So here, this is the entry point of the reporting scheme. This is SFAC 6. There's only 3 disclosures: a statement of financial position, a statement of comprehensive income, and a statement of changes in equity. And this is just used to demonstrate how an XBRL-based report works. So because the way reporting is done by the SEC and the SMA, you're not required to use these hypercubes. So we do something to overcome that, which is I created these specific disclosures. This is in the disclosure part of the schema. So there's the 3 disclosures: balance sheet, comprehensive income, and statement of changes in equity. We then create some rules that helps software understand how to distinguish one disclosure from another. So here's the disclosures for the balance sheet, changes in equity, and comprehensive income. So this is the description. I'm not going to go into this in detail, but basically accountants understand the notions of assets, liabilities, and equity, and those are the things that would appear on a balance sheet. And they understand that equity is what is rolled forward in the changes in equity, and comprehensive income is the total of the roll-up of comprehensive income on the income statement. And these are the ARC rules that define the rules. This is the reporting checklist. This says that a balance sheet is a required part of this financial report, as is the comprehensive income is required, and the changes in equity is required. The fundamental accounting concepts, there's only one rule in here. It's the relation between these 3 concepts. And that is expressed using these terms that were defined, plus these rules that were defined. This is the test: assets, liabilities, equity. And there are also rules for how to derive assets if it was not reported, liabilities if it was not reported, or equity if it was not reported. And this shows you the subtype relations. So this says basically that revenues is part of comprehensive income. It's not part of assets, liabilities, or equity. It's part of comprehensive income. So these are basically the type, subtype, or the wider, narrower rules. So these are all of the rules, and these are the details over here. These are all the rules that are used to make sure that a report has been created consistently against the description. The rules are the description of what is required, and that description, because it's machine readable, can be used by software to help an accountant create a report, plus to verify that the report has been created consistent with that description. And then you can also extract information from the report using the description. I'm going to show you this represented in another way. This is Audit Chain's Pacioli, and I put each of the rules in this. This is the Pacioli Power User Toolbox. So accountants wouldn't use this typically. They can, but they typically would just use software that automates these things, and it generates a report. And this report is basically a human readable version of the rules that are in the XBRL form. So here are the type-subtype relations, or the wider, narrower relations. You can see that. Here are the model structure relations. You can see that these are fine. There are no issues. An issue would be reported here. Here is the reporting checklist. Here are the disclosure mechanics rules. Here are the value assertions, calculations, derivation rules. So this is exactly the same thing that you see in Pesseract. And that's what's so interesting about XBRL, is because these are two completely different software companies, but they get you exactly the same result.